Hi everyone and welcome to Target Retirement Funds 101. My name is Mark and I am one of the employees at understandingyour401k.com, and we've put together this short kind of intro presentation on target retirement funds for the benefit of our subscriber base. So here's what our agenda looks like today. We're going to talk about what are target retirement funds. Secondly, we're going to talk about how do they work. Thirdly, talk about who offers them. So there's many mutual funds that offer them. We're going to give you some links on where you can find additional information for the specific mutual funds or potential specific mutual funds you're looking to invest in. Fourthly, we're going to talk about who might want to invest. And then lastly, we're going to talk about where you can find some more information on target retirement funds. So what are target retirement funds? The official Investopedia.com definition has it listed as a mutual fund that automatically resets the asset mix. So the three asset classes used in these are stocks, bonds, and cash equivalents in its portfolio according to a selected time frame that is appropriate for a particular investor. All right, so a lot of these target retirement funds have dates associated with the end of them. Target Retirement Fund 2050, 2040, 2030, 2020. So they automatically rebalance the asset allocation and the percentage of stocks, bonds, and cash with that specific ending time date in mind. All right, we'll talk a little bit more about how that works in an upcoming slide. They are known as fund of funds. So these target retirement funds, they invest in other mutual funds as opposed to traditional mutual funds, which invest in individual stocks or bonds. And these are really good options for passive investors, people who want to make sure they're putting money away for retirement but don't have the time or don't enjoy doing the research needed. These are, again, a great option for those individuals. So there's been an incredible rise in popularity with target retirement funds since they they came out in the mid 90s there. But you can see the first two stats there, the first two bullet points. At the end of 1995, there was 282 million, and million with an M, dollars invested in target retirement funds. And at the end of 2011, you can see how immensely that number has grown. We're up to 131 billion with a B dollars invested in target retirement funds. All right, and an interesting point here is this only counts new dollars going into these funds. Does not incorporate exchanges from other funds. So exchanges would be if you were in the Dreyfus Bond Market Index, you had a $10,000 in that Dreyfus Bond Market Index. You sold that and then transferred those or exchanged those dollars into the target retirement funds. This is just new money, so new plan participants electing to put their dollars into these target retirement funds. Once you incorporate what the exchange number looks like, the numbers get even more crazy. So the fourth bullet point there shows an increase of 567.5% over the last 16 years in the amount of money going into these target retirement funds. So a lot of Americans are utilizing these funds for their retirement. Another reason they've been very popular, or there's been a rise in popularity, is because due to recent law changes, plan fiduciaries have to make sure they're putting you in a fund that is in your best interest and it's going to give you the best option to potentially see a return on your investment. And that's what's known as a qualified default investment option. So many plans elect within their plan documents when they set these plans up that if you don't choose a fund, they'll automatically put you in one of these target retirement funds. It's not every plan, but a majority of plans, that's the way they're set up. And another reason is just because of their overall simplicity. It's pretty easy to pick one fund around when you're going to retire, and then when you look at your statement, you just have that one fund, and you can see how well it's done or how poorly it's done with just that one mutual fund. So there's a lot of simplicity based around these, and it seems like Americans really have grasped a hold of that concept. So how do they work? They're actively managed funds. So there is a fund manager and his team, and they're making decisions. I don't know about on a daily basis, but on a frequent basis, buying and selling securities and stocks, bonds and cash that are in your best interest based on your overall retirement age. They follow a predefined asset allocation, and they rebalance their asset allocation from riskier assets to more conservative assets as you draw closer to retirement. We have a glide path in the next slide that's going to show you exactly how that works and what that means. Many of these are designed to be your only investment election option. So The fund managers that run these highly suggest that you pick one target retirement fund for your 401k or your retirement planning and go with that one. These follow a glide path, which we're going to show on the next slide. And the other thing you want to make sure that you understand is whether the target retirement fund you're looking to invest in is a two fund, which means it works for you to retirement. At 65, you then potentially have to make another investment selection, or if these are through target retirement funds, which means these are designed to take you through retirement. So even at retirement, you can stay within that same fund and it'll continue to work for you. So that's one thing you want to clarify when you're looking at one to invest in. So here's the glide path that I've talked about. Almost every mutual fund, target retirement mutual fund that I've looked at has a glide path. But the way that this one's set up, and this one's from the Fidelity Freedom Retirement Fund series, there's three main asset classes that you're going to work with here. So the blue and the lighter blue, they represent domestic and international stocks. The green represents bond funds, and then the yellow represents cash and cash equivalents. Alright, so the way this chart works, to show you how it works. So this zero on the horizontal axis assumes retirement. Alright, everything to the left is years leading up to retirement. Everything to the right of this zero is years into retirement. So looking at this glide path, you can see that this is a through target retirement fund. The vertical axis shows percentage weighted across those three asset classes: stocks, bonds, and cash. So using myself as an example, let's say I was 30 years old and I wanted to retire at 65. I'd be 35 years out from retirement, so I'd be right here. Alright, and the way it's currently set up is I would be about 85 to 90% in stocks and about 10 to 15% in bonds. And the fund that most fits my needs currently is the 2045 fund. Alright, now you can see that as I draw closer to retirement down here, these blues continue to sell off while the greens and the yellows started increasing. Alright, so that at retirement here, which is year zero, I may be at a 60% stock, 40% bonds and cash ratio, maybe 55-45. Again, it depends on the target retirement fund you're working with. But again, you can see that this works all the way through retirement. So this takes you to age 90 if you retire at age 65. Alright, so the visual representation usually helps out a lot when we're explaining these during our presentations. Make sure that you always review these if you're looking to invest in a target retirement fund. So who offers them? There's many mutual funds that have their own target retirement funds. The thing you need to remember is that each one is unique. They may follow a different investment strategy in terms of starting asset allocation as well as ending asset allocation. The other thing you're going to want to pay attention to is the overall expense ratio. Alright. The third bullet point there, I've listed some popular mutual funds companies and their target retirement funds. So you have the Vanguard target retirement funds, by far the cheapest in terms of expense ratio. You have the American Century Livestrong funds. You have the JP Morgan Smart Retirement Funds, the T. Rowe Price Target Retirement Funds, and the Fidelity Freedom Funds. After each one of those fund listings, I've kind of used the gauge from the lowest expense ratio out of all their funds up to the highest. Alright, so you definitely want to pay attention to that. And then those are the prospectus gross expense ratios that I've listed there, and I found them through Yahoo. Alright, so are you a candidate? Through doing our presentations, we found that there's usually some individuals with some common traits that you like to invest in these funds. So the first bullet point there, it says people who don't want to have to take care of their account's asset allocation and diversification themselves. Alright, so if you're okay with kind of handing the keys over to someone else to manage that, you might be a candidate. People who don't understand how mutual funds work. Again, kind of goes back to that first point. If you're not sure on how mutual funds work, these may be a good option for you to look at. Third bullet point is people who are okay with someone else making the investment decisions for them. So again, if you want somebody to kind of guide you through the way in terms of how much percentage stocks, how much percentage bonds, how much percentage cash you have in your portfolio at a specific period in time, you might be a candidate. People who like the idea of one fund taking care of all their investment needs. Again, it gets back to that simplicity point that I made earlier in the presentation. It doesn't get much more simpler than this. And then lastly, people who just don't like investing. We've come across this numerous times where people just generally don't have an interest in investing or mutual funds, that's fine. But we absolutely would encourage you to take a look at the target retirement funds if it's offered within your plan. So if you're looking for more information, you can check us out at understandingyourretirement401k.com. Excuse me, it was understandingyour401k.com. That is our website there. And I have the links to the other fund companies that I've used within the presentation. And then lastly, just to serve as a disclaimer, nothing within this presentation should be taken as specific investment advice. This presentation should only be viewed for educational purposes only. Alright, so if you've liked what we've done here, please come back and see us. Understandingyour401k.com is where you can find us, and we look forward to doing some more screencasts for you in the future.